Hey dividend investors, today I am going to give you my list of my favorite covered call ETFs on the stock market today. So basically, if you're a dividend investor, this is definitely a video that you're going to want to watch. A covered call ETF generally has a higher dividend than most other ETFs, and the reason for that is because how the covered call dividend or ETFs work is basically the ETF will hold stock, it'll hold companies, and then they will sell covered call options, which is a covered call strategy. They will sell call options against the stock that they own, and then usually if it's like a BMO covered call, they'll sell it out of the money. If you don't know what I'm talking about, don't worry, I do have videos on it. This is just a brief overview of what covered call ETFs are, but they generally will give you a higher dividend than what a normal stock what they hold will, mainly because the options, the call options have a premium, and you're essentially making money off of the premium. It costs money to buy a call option. It's almost like betting in a way, but I'm getting into this too deep. Let's get down and let's check out my list of my favorite covered call ETFs. Number 1 is the Tech Giants CI covered call ETF. It is TXF on the stock market. Currently the MER, which means that the cost of holding this ETF, we have to remember that it's an ETF. People manage your money for you. So for every $100 that you put into this, it is essentially going to cost you 71 cents every single year. And you generally want to have the stock price or the underlying asset price of this ETF to go up by more than 71 cents per share. And to believe me, if you're going to buy, let's say, even 10 shares of this, which is $200, you definitely want to be making more than $1.40 a year off of your $200. So let's get down and let's check out even more. The biggest reason why I like this ETF is because it has an 11.5% dividend. So for every $100 that you put in, you are going to be making back $11.51 roughly every single year. Now that's good. Now for every zero that you put onto your investment, you are basically moving that decimal 1 over. So if you put $1,000 in, you will be making $115.10. If you put $10,000 in, you are now moving that decimal 1 more over, which will be then having $10,000 make you $1,151. Now, if you were to invest $70,000, let's say you pretty well maxed out your TFSA, I think it's around $76,000 right now, but let's say you put $70,000 into this ETF, you would be making every single year on average, of course we hope that the dividend does go up every single year, you would be making around $8,057 tax-free every single year. On average, that would mean that you're making every 3 months, because it pays a quarterly dividend, of $2,014. And then if you even divide it even further so that you can see the average every month, that is going to be making you an average tax-free of $671 every single month. That is very, very good. Believe me, that is very, very good. Let's think of it this way. If you were making at your day job $16.78 an hour, that is basically 1 week's pay every single month. And this is what I mean when I say make your money work for you. If you are able to save up $70,000, and if you can find an ETF that does have the underlying asset increase and not decrease and pays you a very good dividend like this, you could legit have 1 week's worth of pay every single month that you don't have to work for. Now, you may be saying, well, it's only 1 week. What can I do with the other 3 weeks? Well, you can work. But you don't have to work. You can create your own business, start your own thing on the side, and then once that creates enough of 3 weeks worth of your revenue that you make from your job, you can quit your day job, run your side hustle, which is fun, and then have your underlying asset bring in money. Now, Let's see what the chart looks like. 5 years ago, it started roughly just under $13 per share, and it has steadily increased since then. And this is what we want to see. Now, when we see these downturns, I personally like seeing those. The reason for that is because it's an ETF, it's not an individual stock. So an individual stock could easily go down to zero. However, with ETFs, they hold multiple stocks. And if they go down like this regularly, that tells me that even though I may buy back here, and I'm getting a dividend while it's increasing, and then it stays like that, and then it goes back down, I can buy in again. I can get more. Give me more, because I like the dividend. It increases, goes down again. Buy me more, then it increases. And then you can make that cycle work for you and make you more and more and more money. And then we can see, if we look at June of 2019 versus June of 2020, we can even see that that dividend increases substantially. If that can continue to increase higher and higher and higher and higher and higher, we will see very happy people. Its top companies are Nvidia, Alphabet, which is Google, Applied Materials, Adobe, Amazon, Facebook, Oracle, Apple, IBM, as well as Microsoft. My favorite out of all of the stocks is, of course, Nvidia. Then Amazon is another one of my favorites. Facebook, even though I hate the company, I use it all the time. And of course, I like investing in it in the past. And Apple is another one of the companies I really like as an investment. Another covered call ETF that you will probably really like is my biggest ETF holding, which is BMO Covered Call US Bank, ZWK on the stock market. And of course, this one has another expense ratio that is generally pretty high when it comes to ETFs, but 0.7%. So I'm not going to do the math for you again. I've already done that once in this video, but this one pays 7% dividend, which is great. Volume is not bad. The reason why you want to see good volume is because, of course, if you want to sell, like, let's say 5,000 shares, and their only average volume is 5,000 shares, it's going to take you forever to sell that 5,000 shares. But when it comes to 30,000 shares, you would generally be able to easily sell 5,000 to 10,000 shares per day and not have to worry about it all that much. But who's going to sell 5,000 of those shares? Probably nobody watching this video. And then if we go over to the charts, we can see that this was not started 5 years ago. It pretty much treaded water. It did increase slightly, and then the coronavirus hit. This was created basically the same year as the coronavirus, or within a year from it. And so it's really hard to gauge. We can see early on that it did increase and decrease at the same time. So that is quite an interesting thing. However, it is the U.S. bank. So as long as the U.S. banks do well, we can see that this ETF will also do very well. The dividend back here was ridiculous. I was grabbing it somewhere around there, and I think I was getting close to 10.5% dividend, which is insane. That's crazy. And of course, now it's at 7%. So still a very high dividend no matter what. Now, the dividend I really like about BMO covered calls is the fact that they literally pay them every single month. I like that. It's a nice tool to use. If you are looking to invest, it's very similar to myself, where I like to get dividend-paying stocks because I would like dividends to pay for essentially everything that I do in life, and then everything I make extra, I just funnel more and more into investments so that I can just have more and more money. I generally don't like to use the money that I make, and then I like to use my investment money. Now, that's just myself personally. You may not be there yet, but that is just my own personal investment thesis. Don't use the money that you make. Use the money that your money makes for you. That's just one easy way of, not necessarily easy, but that's one way of thinking, so that it's almost, I actually got that strategy off of one of my favorite comedians and car guys. And he has his own YouTube channel as well, so you better definitely go check that out if you like cars. But Jay Leno, he used to never spend any of his money that he made off of the TV shows that he did, off of The Tonight Show, anything like that. He actually only used the money that he was getting from just like royalties and stuff. So very similar way of thinking that way. But we can see that the dividend does increase. At first, and a while ago, was 15.5 cents. They raised it to 16, and now it's 18 for a while. I wouldn't be surprised if that starts increasing as well, because options are starting to be bought and sold very a lot. Its top 10 holdings is Ameriprise, Bank of America, Citigroup, Trust Financial, U.S. Bancorp, First Republic Bank, M&T Bank Corp, PNC Financial Services, Citizens, and JP Morgan. My favorites out of this one, even though this may be a bit controversial, but I personally really like Ameriprise, Bank of America, as well as Citigroup and JP Morgan. Everyone, of course, has their favorites. And then another one is BMO ZWC, which is another fantastic ETF. This one is, again, a very high MER, but you're going to see that across all of the covered calls. This one's a 7.5% dividend. Now, the nice thing with this one is it is a Canadian covered call, which means that, or Canadian equity covered call, which means that it holds Canadian stocks. Again, very high MER, very high volume, 237,000 shares traded per day. This one's not been around for 5 years either, but at first it was slightly dipping, but so was the Canadian market. And not many people understand this, but I was thinking, even before all of this coronavirus stuff was happening, that Canada was about to go into a recession anyways, and the stock market itself wasn't doing much anyways too, so this was kind of a nice thing to see if you were an investor, because I was thinking that it was going to be much worse, but it wasn't. It's since increased, which is nice, and it will probably continue to do so. See, the nice thing with BMO is they sell out of the money calls, which means that you generally don't have to have people who buy your call options having them exercise them, because that generally makes you lose money, but you make it back with the premiums. At the end of the day, however, if the strike price doesn't get hit, the stock price strike price, basically then that is an expired contract option, and then you get that premium anyways, and then you still have your shares. We can see that this does not increase its dividend all that much, hardly at all. Basically non-existent growth in dividend, but it's still a very nice consistent dividend at 7%. And then we can move on to the next and final ETF, which is ZWH, which is the US High Dividend Covered Call. And this one's a 6.25% yield. That's pretty good in my opinion. We can also see that the volume is not huge, massive, or whatever, but it's still pretty good, especially for ourselves, which are your retail investor. We're not going to be selling tens of thousands of shares anyways, so for us to buy maybe like 100 shares of these, 200, 500 shares, it's not going to be hard to get rid of or to buy. Now, this one is not it might be around 5 years old since they started it, but it's slightly increased. It does have its ups and downs, which we kind of like to see, or at least I like to see, because especially it being an ETF, you can kind of time it really well to buy. When it starts going down, you can buy a little bit at a time even, and then like you could buy a little bit there, a little bit there, a little bit there. Maybe if you're lucky, you can get it there. And then it'll go up, and then it'll go back down. You buy a little bit of somewhere around there, it goes up. You buy a little bit there, you maybe buy a little bit there, it goes up again. See what I mean? And then you basically back up the truck and load everything up when it hits there, because, of course, you want to make money. This one, again, very rarely raises its dividend. It was 10 cents way back here, but now it's 11 cents. But it's not a huge increase by any means. But it does pay every single month, which is nice to see. And of course, its top holdings is Bank of America once again. We have Home Depot, JP Morgan, some of my favorite companies. Then we have Chevron, which is an oil company. Some people might have mixed feelings on that one. AT&T, not one of my favorites, but a lot of people do like it. Coca-Cola, again, not one of my favorites because it's a sugary type drink, but they are actually improving what they invest their money in so that they can make more money into the future when people become more healthier, hopefully. But anyways, these are my lists of the top ETF cover calls. I hope that you have enjoyed today's video. If you have, hit that like button and subscribe. Make sure to always do your own research. Don't listen to a random YouTuber on the internet, because you could get into trouble that way. So make sure you do your own research, learn everything that you can before you invest, and that way you will be making a ton of money. I hope that you've enjoyed. Hit that like button, subscribe. I will see you guys again next time.